All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 2nd, I believe, of August. Yep, we're on the correct date. Pleasure to be with you here today. And I've had a couple people ask me some questions. And one of the questions was, why did you create Hurley Investments, and how are you able to be successful at it? And I think I've told you guys the story in college of creating a business, having a professor buy it from me, having kind of getting hosed on how the trust was set up, but I couldn't touch the proceeds for up to 7 years, so that he was protected on me not taking the business back or, creating another one that was against him. So I always knew there's a better way to invest in funds. When Vanguard makes more money than you do and you take all the risk with your money, I learned really quickly that there's a better way to invest in funds, because they are way too expensive, and the funds make more than you do over time. Plus, they rarely, if ever, beat the S&P 500. So I had to find a way to trade that I could beat the fees in funds, the double taxation in funds, and more importantly, a way that could get better results than the funds. Number 2, plain and simple. Come on. I hated paying for someone to tell me to wait through down markets. Let's face it. What the hell was I paying someone to tell me this for, if it was always the market's fault that they put me into something that didn't make money? Which really made me think, okay, there's something wrong here. There's something wrong with the system. So is there a methodology out there that would help me help you guys make it through down markets? Number 3, pretty simple. I wanted more understanding and interaction, which for me equaled education on what my money was doing. I kind of giggle when it was suggested a year ago with COVID, hey, you guys should have a webinar where you spend like 15 minutes talking to your clientele. And there's 160 of us there in Utah, and everyone around me, so I'm talking like 24 people, everyone around me was like, well, man, what would I talk to them about after 5 minutes? And I giggled. I giggled because the customer service side of managing people's money was not there. And the people I'm up against right now, there is no customer service side to help you guys understand what your money is doing and why. And I knew that pissed me off. I mean, let's face it, it really bothered me in the day. So part of what I do is I try to find a way to help you understand what your money is doing. And as I look at who's here today, it's kind of funny because Bill Brandner and I have been in educations together for forever. Same thing with Lee Maxwell, Russ Kramer, Schultz and Sorensen here have been with me for when I was going through educations. Rich Mormon, through an education, I was able to touch base with him. William, you met me through webinars online. Jim Kohler is through education, well, through a recommendation through an education. And Jeffrey, we sat and talked to each other on the golf course. Mary, through a referral to spend some time with you. And, you know, it's just been a treat to help you understand what your money is doing and why. That interaction is what gives you the ability to truly understand what the end goal was for your hard-earned investments. Abraham typed in my case, very simple, decide that it was enough to have others to lose money for me. I was going to lose money myself, and I was better than them at it. That's exactly what got me started. That's exactly what got me started. And plus, I've got my Brazilian sidekick, my friend from Brazil, who attends these webinars with me. And then number 4, which is really completely selfish, but it kind of goes along with what Abraham was saying. I wanted the control. And I guess the control means I wanted to have my money work harder than I did. I'm a control freak. I mean, let's face it, this for me, this equals I hate losing. And this is going to sound really bad, but you show me a good sport in losing, and I'm going to show you a loser. I'm not saying I want people to be a bad sport and losing, but if someone is okay with losing and it doesn't grind at them and it doesn't bug them, then there's something wrong. Now, with all of these expectations on what I was doing, I learned this. It was a lot harder than I thought. Fear and greed with other people's money is even harder than dealing with emotions on your own money. To do what I wanted to do, it cost me, well, let's face it, it cost me $65,000 more than I thought, and takes a lot more time than the other losers who act like they are working. And it's funny because someone questioned me on that just here recently. And they meant it nicely, so I'm not frustrated with you. To do what I want to do, it costs me, again, takes a lot more time than the other losers who act like they're working. Thank you, I spelled that right. All right. And what I mean by that is, someone asked me just the other day, well, what are you doing? And here's a basic example of what last week looked like for me. I'm paying attention. I'm going to highlight. I'm paying attention to what new home sales were versus what they were expected to do. I'm paying attention to Lockheed Martin, and I paid attention to Hasbro, 5, and Tesla. But Lockheed Martin, pretty amazing. $7 billion in revenue versus 6.52. $7.13 versus $6.52. They made 17.29 billion instead of 16.93. I read through their whole Schedule K and their earnings documentation, and they basically gave away $400,000 on a government contract that ran up and came due. So they went down. Boy, I followed 3M, Boston Scientific, Citigroup, JetBlue, Waste Management, UPS, Juniper, Microsoft, Google, but I paid attention to GE, who went up, Apple, who went up, Visa with good earnings that went down, Starbucks with fabulous earnings that went down, but the revenue didn't meet expectations. In fact, I paid attention to all the durable goods orders, which were not very good, comparatively speaking. Consumer confidence, which was fabulous. I even built myself a little, what is it, 6x7? And I know it's kind of stupid, but I even built myself a little probability chart. Named some things, went through. I worked the probabilities for where our GDP numbers could come in. I also worked the same probabilities for where Lockheed Martin and Apple and Visa should be on a 3x1, 2, 3, 4, 5, 6, 7, a 3x7 probability chart using 2 standard deviations, and just stuck them through on where they should be. Did a little calculation in Excel so I could prove to myself where things should go. Kiev was off on Wednesday. I went through FOMC rate decision. I watched the CME, Garmin, McDonald's, Pfizer, PayPal, which was awful, Facebook, who beat top and bottom line and users, which was down, Boeing, Ford, went through all of their earnings and their schedule. I call them Schedule Ks, but that's not what they really are. They're well, they might be. Went through hundreds of pages of paperwork to calculate out where they're earning their money and where it's coming from. This is what it takes to understand where markets are going. And let me just pull down again, it looks the same way on Thursday. Did it for First Solar to make sure everything I said to you guys was correct. Worked the GDP, especially checked MasterCard because we have Visa. Checked Beazer Homes and MDC Holdings, Valero, Skyworks, forgot what the other one was, Gold, Twillo, T-Mobile Sprint, Lending Tree. I made sure as I calculated all of the numbers for the GDP, where they're coming from, if we're still on track. I went through all of this information, even being on the road Thursday, so I could make my appointments for Vegas, Sunday out in San Jose, Thursday night here in Highland. Made sure and worked through all my numbers so that really my expectations can be backed by real numbers. And that's the key right there. So I'm going to ask you guys a quick question in regards to what's going on or what will go on here in the next, I don't know, let's say the next 3 months. If I was to ask you guys really quickly, what is your expectation for the next 3 months? And that's what I'm going to ask you guys. Where are you guys going? What's your expectation for the next 3 months? And maybe we can obviously go from there. So help me understand, if I was to ask you, What is your expectation for the stock market in the next 3 months? And then I want you to give me a couple of reasons why. Because I'm interested. I know Abraham will mention something quickly. Rich Mormon asked about General Motors. Your feed is probably off. General Motors is not up the GE. Wow. So yes, General Electric went through a split adjustment today. And all that means is they went from, they went from GE, $13. I think they did a 9-for-1 condensing. So let's see what they did. They did a stock split. That should really help our position out, though, especially being up 3% today. So, Rich, I will go through that later on tonight. But here we go. What are your expectations for the next 3 months? Abraham, flat to slightly up with some bumps in the middle. Lots of money available. Inflation ramping up and Fed will cough a bit. Rich Mormon, yeah, it is. It's in everywhere. Rich, it's in more than you would expect. And I probably should have told you that last week. I just wasn't sure how their stock split was going to happen. All right, let's see who else typed some things in here. Bill, size market by the end of 3 months, COVID BS infrastructure bill, if not passed, will hurt inflation problem. Several people talking about the market going down. I expect it may dip, but hope it gives us a surprise like last year from Kramer. Jim Kohlers, market sideways due to politics and lack of leadership and weakness of us perceived worldwide. William, down as the market and the world fights COVID again. Rich, lower, no more stimulus, real effects of the virus will be realized, higher inflation, housing cost issues. So it's really, I love all these. It seems like the market will go sideways to down. September 3rd, worst month, and October is always the worst month in the markets. Meaning it's the worst month, it always goes down the worst there. And that's just historical or cycles, business cycles. Inflation, Fed raising rates, stimulus already baked in, infrastructure bill not exactly what it is supposed to be. Don't forget this one. Higher taxes, and that's going to be both Fed, state, income, and capital gains, right? People not getting back to work until the end of September, which means companies will not have the inventory that they typically expect, that they will be typically building August, September, and October for a Christmas season, which should mean a weekend Christmas rally this year, which will directly affect lower earnings year over year. What have I missed? Anything? I'm mentioning all this because today a Fed chair let the news know that rates will stay lower for longer, which equals our primary source of our stock market. Banking will continue to be difficult for comparable quarterly returns. And really, if you ask me, the S&P moves on financials and transportation. Everything else follows those sectors. So as I'm looking at what we're going to do, I really hope, I am such a good typer. I really hope to see a 15% decline in our stock market. Can someone tell me, how do I calculate a 15% decline when we just had, what, a 6.5% GDP? How am I calculating a 15% decline on, what, 116% year over year S&P 500 earnings? How would I be calculating that? How do you think I'm coming up with that? I'm letting you guys think because I want you to. COVID concerns again, crystal ball. And you know what? I should put COVID in here because I haven't. COVID worldwide. Although I read such an interesting article or comment. And I apologize if I offend someone here. CDC says 7-day average of daily US COVID cases surpasses peak seen last summer. So let me get this straight. COVID, the highest 7-day average cases last year was 68,700. Our current 7-day moving average is 72,790. We basically have 4,090 more cases on a 7-day average than we did at the highest we had last year. So why did we freak out and lose so much of the control of our economy? Well, Kevin, there are only 330 average 7-day deaths when we had 1,100 average deaths last year. I need to ask the question. Was that because you were paying $7,500 that people that were flying through windshields and dying of pneumonia and suicide and guns and knives and car accidents and plane accidents, were they all just counted as COVID cases last year? so hospitals could receive the $75,000 per COVID case? Really? Here's the interesting part. The interesting part for how I see hope a 15% decline is nothing more than backing out stimulus from GDP and using a 5-year average S&P 500 returns versus going against last year. So what that our S&P is up 22.6%? Way above the 8% average. The real returns are not there. And I'm just coming up with a number of, it's really like 15.86%. If you want to get technically technical, I'm going to say it's 15.86%. So I want to be prepared for it. I want to be a little cash heavy. I want to see a Christmas rally, even though it won't be as robust as last year or most years. It doesn't mean that we still can't take advantage of it. It's going to be a unique year. So I run all these calculations. You guys take a look at what I do on my scratch and whatever. I create probability charts. I run my numbers. I just do what it takes to give me a general idea of where it's going to go. And the reality is the most important thing with all of this research and work, it still doesn't guarantee that any of it will come to pass. Which is why it's so important to make up something on the way down, whether it's cash, whether it's shares. The bummer part, and I know this year hasn't been stellar, the bummer part sideways. We're in a range. For 1, 2, 3, 4 months, our market is doing exactly what we don't want it to do for collar trading. For collar trading, for sideways moving markets moving sideways, is doing exactly what we don't want to see it do. Sideways, the bugger. Only going to right here. 3.5 months. Which is why we typically are in a more tech heavy, but even that doesn't look any better. We went through points. On the top side, we've been capped for 5.5 months. 5.5 months. 14,175, 14,200, 14,176, 14,200. Four bounces in a sideways market. Not the position we want to be in if we have positions to make money, if they go up or down. It's hitting that third movement that doesn't help us in our positions. For crying out loud, let's get a bunch of movement at the end of the year. Pretty neat. August, I'm calling a 2%. Excuse me, I'm calling a 0% right now because I don't know. I said 3% for 3% for a lot of August. For July, excuse me. For July, our market set is going to be about 3%. Trying to find where our July was overall. I took a snapshot. It turned out to be 2.27. The 1 month return for July was 2.27. I thought it'd be a 3% return. Close, just running calculations, just trying to see where we're going to end up, just trying to follow with what some calculations might give me to be an overall position. Expect we were at 3% till the last couple of days of the market, and then the market fell out from underneath us, and that was that. So not too bad of a return, but that's what it was. Came pretty close, just trying to see where we'd end up when it's all said and done. No, Bill, a strangle straddle would be 2 long positions going up or down, and a strangle straddle needs exceptional movement. So actually you'd be looking for calendar trades, would be your sideways moving markets, calendars, covered calls, out of the money bull calls, bull puts, out of the money bear calls, bear puts. But no, strangle straddle, twice as expensive option trade, and you need serious movement up one way or down the other. Unless you're talking about a naked straddle, which you don't want to do. Economic reports, construction spending, ISM manufacturing, ADP employment on Wednesday will be significantly important. Services IM index will be important. And then Friday, our average work week, that's what's going to move us. And really, it's going to come down to, the, for crying out loud, it's going to come down to people getting back to work. Found an interesting article. Again, here's what's in the $550 billion bipartisan bill, just so you can see roads, bridges, public safety, public transit. Take a quick peek here. I found a very interesting article given to me by a colleague of mine. Thank you, Bill. A very interesting, hey, look how they want to tax cryptocurrency. If you've ever thought of being in cryptocurrency, make sure you spend your time reading through this article. Very interesting. Ford. Is Ford stock a buy after earnings? Automaker resistance at this key level? Please go through it. The short answer is yes, it's a buy. But very interesting because it talks about all the different parts, all of where their new CEO is going. Do go through it. Facebook earnings beat expectations, but warns of significant slow growth. Definitely feel free to read through this article. Very interesting article on how Facebook's doing what it's supposed to be doing, but is there going to be a glitch or a hitch in what's happening? If you want to see about Facebook, Visa, buy, never, again, never sell. Article on why we're in Visa. Tons of information in here. This is some of the calculations we do to make sure we're on the right track. Ford just will not stand aside. Very interesting article on Ford and going through their investments into hybrids. Definitely go through and look through this article on if their hybrids will get them to where they need to be. Now, I've got a couple interesting articles in here. Why food miles matter. Here in the state of Utah, our government is looking at how to produce food and not increase the cost through transportation. So a very interesting article on why food miles matter. I thought it was going to be more of a liberal type of article on, hey, you're causing so many emissions by transporting here and there. It actually talks about the cost of transporting food and how the states need to come and step it up on producing their own more commonly used foods if they want to lower their cost basis of providing certain foods to your individuals. Utah right now, being in California, it's $4.15 for gas in Southern California, and Utah I pay $3.99. Utah is one of the most expensive states in the United States for gas. It kind of pisses me off because we do a ton of East Plains gas harvesting of crude. So why is Utah's gas so high? There are zero, well, there's a refinery, but there's zero refineries that produce any gas or petroleum for the state of Utah. So we pay some ridiculous fees in shipping our gas from out of state. All the gas that we pull out of Utah and our fracking system, our drilling system, goes down to Texas and back up to us and increase the cost of our gas at a ridiculous amount. Something I wish I could see our regulators give a crap and fix here in the state of Utah. All right, what else do we have? But very interesting article on food miles. Do go through and read this. A July jobs report could be what gives the market its next big jolt in the week ahead. If people are coming back to work, the jobs factor, as they call it, very interesting. I do suggest you go through and read this, but pretty interesting articles on what I'm looking through this week and just some commentary on what it is. With that said, I hope today was helpful to give you an idea of what I'm doing in and day out and why I talk a lot of numbers when you come in and question for things. But do you guys have any questions about tonight? About what we're doing, why we're doing it, what we're trying to do for you, what I'd like Keith and I to be able to do as we're sitting around all day long. Are there any questions I can answer for you guys to help you understand what we're trying to do, why we look at things the way we do, and how we come up with our predictions on where the markets could go, understanding that there's never a guarantee. William, tonight you're my favorite. The short answer is yes. We appreciate you understanding the hard work that we do, and it's our pleasure doing it. I don't want to be like any of the other brokers that doesn't even know what you're in, just puts you in a fund. That is not what we are here for. We are here to do more work than that. So thank you. Jim, yes, of course, I can do that. Okay, I don't see any questions coming in. Guys, I appreciate you being with me here today. We will get this posted later on this evening. If you do have any questions on something I may have missed on today, please don't hesitate to just zip me an email, khurley@hurleyinvestments.com. But I hope this gives you a general idea of what we're looking at and why. What we look for as we're doing our research, what we pull out to give us an idea of where our markets can go. I haven't left out that we still could see an 8% higher this year from stimulus coming into our market as a percentage of GDP. I just don't understand why it would go that high right now. So instead of giving you the hope of where stimulus could go to, I've chosen to kind of hold on to that myself and just see if things will move higher down the road. So not all doom and gloom, but I haven't worked all the numbers out to give you a general idea of where I do think the high side is for our markets just yet. Really, the inventory numbers don't look very good. So that's where we're at there. All right, guys. Hey, have a wonderful evening. My pleasure being with you tonight. I look forward to seeing you tomorrow night, and we'll go from there. Good evening, guys. I hope this was helpful to see what we're doing, where our time is being spent, what we're working on, and I will talk with you tomorrow evening. Good night, everyone. Bye-bye.